I typically invest and organize my high yield portfolio with a longer term outlook, at least 3 to 5 years in the future. And so I do not let short term macroeconomic factors weigh too heavily on my portfolio allocation decisions. That being said, I don't completely ignore current macroeconomic conditions when weighting certain positions and sectors in my portfolio. And I think right now it's especially important to pay attention to current macroeconomic factors. And so based on current macroeconomic factors, I'm going to share if I could only invest in 2 investments for the next year, which 2 those would be. But before I get into today's video, if you could please give it a like, I'd greatly appreciate it. Help with this video's distribution, help me grow my channel. Thank you very much. Okay, so what are the current macroeconomic factors that I think are worth paying attention to when shaping your own portfolio? The biggest one right now, I'd say, is that we are very likely going to see the Federal Reserve pivot to rate cuts here, probably already starting this month. My personal view is probably a 25 basis point rate cut. Possible they'll cut by 50 basis points. I think it's much more likely they'll cut by 25. But regardless, when you have rate cuts implementing, I think another big thing to keep in mind is that we are probably going to experience an economic slowdown, potentially a recession here in the near future. There are many reasons to believe this. We've had an inverted yield curve recently. We have unemployment rising. We have, the jobs market in general weakening. We have consumer spending and confidence starting to weaken a bit. Inflation is showing signs of gradually declining, although it's still being pretty sticky. We're also seeing levels of credit card debt and corporate debt at record levels. And so when you combine all those factors with the fact also that many of the U.S.'s international leading trade partners like China, Japan, United Kingdom, and other places in Europe are all facing meaningful economic challenges of their own, this could all combine to likely lead to some kind of an economic downturn, or at the very least a slowdown. The final, but probably arguably even the most important macro consideration to keep in mind right now when looking at deploying capital over the next year is the fact that we are in a period of very heightened geopolitical risk. You have the impending U.S. presidential election here. It's already very tight, very tense. We've already had an assassination attempt on one of the candidates, and we've had a contentious debate. It's very, very possible that depending on how the election works out, actually for either side, potentially winning, there's a scenario in which we could see some social unrest. So there's a lot of uncertainty there. We also have certainly numerous wars around the world. In Eastern Europe, we have Russia and Ukraine having conflict with each other. We have in the Middle East, Iran and Israel in a major showdown. Already Israel's fighting a lot of Iran's proxies, but that war could explode at any time. Then in East Asia, you've got China in major tense standoffs with 2 different regional countries, Taiwan and the Philippines. Either of those could turn into a war at any time, which would very likely bring in the United States and potentially engulf the entire world, or at the very least the entire region, which would disrupt trade and the global economy to an incredible amount. Certainly, the Korean Peninsula is also a very major hotbed, with North Korea constantly saber-rattling with South Korea and the United States and even Japan. And so for all those reasons, there are a lot of risks right now to keep in mind. And so keeping all of that in mind, here are my 2 favorite investments. If I could only buy 2, if I could only hold 2 stocks in my portfolio for the next year alone, these are the 2 I would pick. The first investment I would pour into is gold. Now, if I could only pick one form of gold to invest in, it would probably, for 1 year only, it would probably be an ETF, because that's nice and liquid. You don't have counterparty risk of any kind, company risk. It's just the bullion. I think gold has a very bullish outlook, and there are many reasons for that. One of them simply is due to the fact that historically, whenever the Fed has pivoted from rate hikes to rate cuts, is what we're currently going through now, gold the last several times has outperformed immensely. Of course, gold has already outperformed significantly over the past year. It's up by about 1/3. And so obviously gold's already done well, but I think it has even further to run. And there are many reasons for that. One is, like I just said, the rate cut cycle shift. We have central banks are buying gold hand over fist right now across the world. It's an ongoing de-dollarization of the global monetary system. Is one of the really fallouts from the Russian invasion of Ukraine, with the sanctions being placed on them by the United States and other countries around the world. It's kind of spurred a lot of countries to start to de-dollarize to reduce their exposure to potential sanctions from the United States. Another very bullish factor for gold is simply the fact that we are likely headed to some kind of economic slowdown, potentially a recession, and historically gold has outperformed the stock market in recessionary scenarios. Another reason is, as I mentioned previously, the geopolitical risk facing the world. If we were to have major geopolitical events, new wars break out, especially in East Asia, history has shown that gold outperforms the stock market pretty consistently whenever geopolitical risk spikes. Another big reason to be bullish on gold right now is simply due to the fact that we have massive runaway deficit spending in the United States, a huge debt, really massive runaway spending in many countries, China, Europe, certainly Russia right now, all over the world. And so as fiat currencies become increasingly inflated, government balance sheets become increasingly weak, that makes gold a much more attractive safe haven, a store of wealth by comparison, hence why central banks are hoarding it and increasingly individual investors are as well. And I think we're already in the early innings of that. Certainly the rise in cryptocurrency like Bitcoin has contributed to that as well, but I think a lot of that demand is going to go to gold and even silver as well. So again, I think gold has so many tailwinds for it, even over just the next year, that again, who knows where the price of gold is going to go over the next year. It's really hard to predict over a 1 year period how the price of anything is going to perform, but I think the odds are greatly in gold's favor over the next year. And so if I could only hold two, gold would probably be my number one pick that I would have. The second one that I would go to is Brookfield Renewable Partners. Now, that may come as a surprise to some of you. It's a fairly niche business. Many people haven't even heard of it. Why Brookfield Renewable Partners? It's just a renewable power yield company. Well, there are several reasons why I'm bullish on Brookfield Renewable Partners. The biggest reason is simply that it's a very high quality company with an impressive track record that trades at what I believe is a compelling discount right now. It has a distribution yield of nearly 6%. It's been growing its FFO per unit at a 10% CAGR over the last many years. It's been growing its distribution every year very consistently through all sorts of macroeconomic conditions. Management has guided to continue doing so, likely at a slower pace than its FFO per unit, which it's guiding for 10% plus FFO per unit growth for the foreseeable future on an annualized basis. But, the distribution may only grow at 5, 6, 7% per year, but it's still going to grow at a rate that beats inflation. And when combined with the 6% current yield, you're still getting very attractive combination of yield plus growth with this investment. It's got a BB plus credit rating, by far the strongest in the renewable power yield co space. In fact, none of its peers are even investment grade. It has long-dated maturities, long-dated contracted assets. It has very low floating rate debt exposure. The vast majority of its debt is non-recourse to the corporation. It's at the asset level, which further reduces the risk of the balance sheet. It has the vast majority of its cash flow is inflation indexed. And so if we do end up in a stagflationary scenario where inflation remains a bit higher for longer, the economy slows or even slides into recession, and you have long-term interest rates not coming down a lot because of the sticky inflation, I think BEP is going to be in great shape because its cash flows are going to grow in line with inflation over time due to the indexation of the cash flows, while its debt is only going to mature at a very slow pace because it's got these really well-laddered maturities, not much in the near term at all. And so if anything, higher for longer inflation may actually be a tailwind for BEP's organic growth. Now, obviously, it will increase its cost of capital because the equity price will be lower, the cost of new debt will be higher than it would otherwise because of the higher interest rates, but that will help offset some of it. And it already has really strong organic growth already locked in. It has a very large development pipeline. It has a recently signed deal, massive, the largest deal ever signed in the space for power purchase agreement with Microsoft to develop renewable power to power Microsoft's AI investments. And Microsoft is a company that is very ideologically committed to renewable power energy. It's the product of Bill Gates and the management that's taken over from him. They're all very, liberal leaning politically, and so they're very committed to renewable energy and that side of things. So regardless of your political ideology, regardless of what you think of renewable energy as as it compares to, say, fossil fuels, and note that I'm also very heavily invested in fossil fuels myself, as I've said in recent videos. So, I personally am pretty agnostic to the future outcome of the energy transition, so to speak. But regardless, it should be obvious that Brookfield Renewable Power has a strong growth pipeline locked in for the foreseeable future. So regardless of where this heads over, say, the next decade or two, BEP is well positioned for the next year at least in terms of growth. And so for all those reasons, I'm very bullish on BEP just from a simply valuation versus their quality basis. In fact, I didn't even discuss yet the fact that they have a very well-diversified portfolio of renewable assets. In fact, one of arguably the best in the renewable power space. They have a crown jewel hydropower portfolio that actually makes up the great bulk of their cash flows. That's well diversified. These are permanent assets that actually appreciate over time, like real estate, as opposed to depreciating in value like traditional wind and solar farms do. Of course, they have plenty of wind. They have a very rapidly growing solar portfolio. They have battery storage assets. They even have nuclear assets through their Westinghouse business acquisition recently. So they have a very well-diversified portfolio across the renewable space, very promising growth pipeline. And from a valuation standpoint, Their price to AFFO multiple has come down significantly over the past several years as the stock price has plummeted with interest rates rising. Again, their yield is quite attractive, their growth profile is quite attractive, and they have a capital recycling program that they leverage their relationship with their parent Brookfield, who is one of the largest asset managers in the world, has immense scale around the globe, huge deal flow. And so Brookfield Renewable Power is able to regularly sell mature assets at attractive valuations and recycle the capital into new opportunities where they can implement a value add approach and unlock additional value for shareholders over time. And this accelerates the compounding process for them. They not only buy good assets and businesses on a value basis and operate them soundly and extract additional value over time, but they also are able to implement their capital recycling program to further accelerate the compounded returns. Other reasons why I'm really bullish on BEP and for the next year in particular is simply due to the fact that just as their stock price plummeted when the Fed began hiking rates, I think when the Fed cuts rates, that's going to be a very bullish signal for a company that has a capital-intensive business model. They're constantly having to raise new capital, and so that's going to really help them when rates come down. Another reason to be bullish on them potentially is if the Democrats happen to win in November. If you look back in 2020, after the Democrats won there, BEP and other renewable stocks soared higher because, again, Democrats they're left-leaning, they favor renewable energy, and so there's the expectation that they will, allocate more subsidies to the space, or at least support current subsidies, whereas if the Republicans win, there's less confidence that will happen. But I still think that even if the Republicans win, BEP will do just fine because, again, the cheap valuation, the strong growth tailwinds that I already mentioned that are not going to be disrupted because these are already locked in with prestigious companies like Microsoft for the foreseeable future. And so when you have those plus the rate cuts from the Fed that I don't think will change if the Republicans come into power, BEP has some strong tailwinds. So there you have it. Again, I don't recommend completely gambling your portfolio over what you think is going to happen over the next year. I don't do that. That said, I do when I deploy new capital or weight certain positions, I do take current macroeconomic events and keep them in mind. And so hopefully this video was useful for you. If it was, if you could please subscribe to my channel, let me know in the comments below what you liked about the video, and be sure to give it a like as well. I'd greatly appreciate it. Thank you very much.